It seems like every day we get another IPO, and in today's video, we're going to be talking about Coupang, which is a South Korean e-commerce company that made its debut on March 11 of 2021 and quickly soared to a market cap of over $84 billion on its first day of trading. Now, most people have never heard of Coupang, but everyone's heard of Amazon. So you're going to see a lot of headlines like this talking about the Amazon of Korea. And you being a smart investor, you know two things for certain. First one, if you're called the Amazon of anything, it usually means that you have massive growth and it's going to lead to market dominance. And second, e-commerce companies like Amazon, Alibaba, and Shopify have made people filthy rich, and now it's your turn. But before you log on to your brokerage to buy some Coupang shares, give me a few minutes because I'm going to explain why you should not invest in Coupang and why you should stay far away from this Amazon of Korea. And couple disclaimer, yes, I am Korean, and yes, of course I want to see a Korean company succeed in the United States stock market, but I'm here to reveal facts that Western medias are not going to be telling you. So think of me as your friendly Korean translator who went through Korean news articles and videos and gathered the truth about why Coupang is definitely a stock worth skipping. Let's get started with some background information about Coupang's history and get into some financials. Coupang was founded in 2010 by Bom Kim and actually started off with a Groupon style model offering local discounts, which is where the name comes from. Coupang is a mash of the word coupon and pang, which is a Korean sound of hitting the jackpot. And actually CNBC is actually pronounced Coupang, not Coupong. I mean, you would think they'd double check with their Korean employees, but nope. And even in this 3-minute video, they mispronounced Coupang 11 times.
Coupang, 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 Coupang.
Anyway, they almost IPO'd back in 2012, but the CEO, he pulled out because he thought people liked the business, but didn't love it. So to accompany, it changed the business model to match more of Amazon, and it soon became a third-party seller platform that it is today. And some of Coupang's early investors are SoftBank's Vision Fund, its biggest backer who had put in $3 billion, along with other notable investors like Sequoia Capital, BlackRock, and Bill Ackman. And Bill Ackman might get some flack for things he says and does sometimes, but good on him for this one-kind gesture. Now, Coupang is an end-to-end logistics company. You place an order on their website, which gets routed to one of their 100 fulfillment centers spread across 30 Korean cities. And afterwards, one of 15,000 delivery drivers, they're going to drive and drop off the package to your doorstep. And with 70% of Koreans living within 7 miles of a fulfillment center, Coupang is able to do something even Amazon can't do right now.
Tell them about dawn delivery, because this is something. Even in the U.S. with Amazon Prime, nobody has a clue relative to what you folks are doing. I've been talking about sort of what you guys do relative to what it's like we're almost backwards relative to where you guys are.
Well, you know, this is a service that allows customers to have access not to just convenient store level selection, but millions of items within hours. So, you know, an executive of ours had promised his son that they were going to go rollerblading together, for example. And on Friday, he realized he hadn't bought the rollerblades. Because our dawn delivery allows you to place an order as late as midnight and get it before 7 a.m., he placed an order for rollerblades before he went to bed. In the morning, it was waiting for him outside his door, and he was able to keep his promise. And had those rollerblades not been the right size, he could have left it outside the door, no packaging, no printed label. And because we're end-to-end integrated, our drivers would have picked it up promptly. And when they scan it in front of his door, the refund would have initiated immediately. So it's not just free returns, it's stress-free returns. And that's the kind of experience that we've been able to build.
And other services that Coupang offers, they have Rocket Fresh, where customers, they can receive their order by 7 a.m. the next morning. And they also have Global Purchase, and it is free for products over $27, and you can receive it in just 3 days. And they copied Amazon Prime. People can sign up to Rocket Wow Club for less than $3 a month, where you get the crazy fast dawn delivery and next delivery that the CEO talked about. And of course, with so many benefits that it offers, it has led to massive market gains for Coupang. According to this graph made by Goodwater Capital, Coupang's market share increased the most, going from 18.1% in 2019 to almost 25% in 2020. And that's not all. This particular analyst, he thinks that it is possible that they can actually gain as much as 30% plus over the next few years. And in anticipation of hypergrowth that they're seeing, Coupang is doubling down by looking to hire additional 50,000 workers by the end of 2025. And for all of you number nerds out there, let's get into the financials because you're going to love this. Last year, 2020, Coupang's net revenue was $12 billion, up 90.8% from the previous year. They also increased their customer base 25.9% and now has 14.8 million active users. In addition, each customer, they're spending more, 59% more to be exact, compared to last year's quarter. And gross profit is up 92.3%. They're able to curb their losses substantially. In 2018, as you can see, they lost over $1 billion, but in 2020, they only lost half that, only losing $475 million. So the losses are going down, which is a good thing. And so far, you hear all this and everything sounds great for Coupang's future. But with all the good stuff out the way, let's peel back the blinders and get into the reasons why you should positively, definitely avoid investing into Coupang. Starting off light, if you're focused on dividends as a dividend investor, it's good to skip this one because they do not intend to pay dividends over the foreseeable future. But I'm more concerned about Coupang's valuation. Overall, experts predict that Korean e-commerce market is going to reach $206 billion in 2024. Like the analyst said, he thinks that Coupang's market share is going to grow to 30%. But if we calculate all that, by 2024, Coupang's market share is going to be $61.8 billion, which is far less than what their market cap is currently trading at today. Which means that there's two growth paths for Coupang. Number one, to get more users, or number two, to have current users spending more money. And Coupang currently has 14.8 million active users, but their total addressable market is capped at South Korea's population, which is 52 million people. And mind you, this number is including kids and infants as well. And like other developed countries, South Korea is seeing a reduction in birth rate and the population is going to naturally decline over time. And compared to South Korea's 52 million people, Amazon has a massive addressable market of 328 million people living in America, while Alibaba has 1.4 billion people living in China. So you might be thinking, that's just a quick and easy fix. Coupang just needs to expand internationally. That is true, but this is what the CEO had to say back in 2018.
Would you ever expand outside of South Korea? People don't even appreciate, having been there and seeing what goes on. Coupang, it's like you can't buy anything without this company. It's like, I don't know if it's I don't want to call it a monopoly. Nobody likes the word monopoly. But literally, like 1 out of every 2 diapers in the country sold by this company. It's kind of a crazy situation. Would you ever expand outside of South Korea?
Well, the constraints that we're solving for are shared by a lot of markets in Asia. But, Korea is one of the largest and fastest growing markets in the world. It's the 5th largest e-commerce market in the world today. It's on pace to be the 3rd largest e-commerce market in the world in 3 years, just behind China and the US. So there's a lot of opportunity in the home market, and we're focused on the home market today.
And when Coupang IPO'd on March 11th, SoftBank's Lydia Jett, she did an interview, and she was asked about international expansion, and she had to say this.
Well, I'm a big fan of Korea, but I still have questions about the depth of that particular market because it is so unique. It is so urban, so different when it comes to delivery, density, et cetera. Are you saying that they don't have to go outside Korea, you think, to justify this?
Yeah, so I am sitting in Sun Valley, Idaho today. It takes me 4 days to get a package from Amazon, and I could not be a bigger Amazon user. I'm a proud Amazon user. That is not the case for people who sit in every reach of Seoul, every reach of Korea. So yes, Seoul is big and dense and urban, but Korea itself has far reaches, and Coupang offers, generally speaking, the same service across Korea. So I think this is a petri dish of innovation. I think this company and this management team is strong enough to go international, but there is so much left to do in Korea that's where we'll focus for now.
Now, both the CEO and Lydia Jett, they're both saying that so far they're only focusing inside Korea, and even in their SEC filing under our growth strategies, Coupang doesn't mention anything about international expansions. Everyone seems confident that there are lots of opportunities left in South Korea, but for investors looking ahead, international expansion is definitely something that needs to be addressed immediately. Next, I think it's important to figure out why Coupang IPO'd in the United States instead of in Korea. And no surprise, the short answer, it has to do with money. And by going public in the States, Coupang can attract bigger investors with deeper pockets and also get a higher valuation. Remember how Coupang has almost $500 million in losses in 2020? In South Korea, there are laws that make it harder for companies with big losses to go public on the Korean exchange, so it makes sense that they opt to go to the United States route. And besides, why settle for a fish when you can capture a whale? And for Coupang going public in the United States, it's an easy decision so their early investors can exit with a bigger paycheck. Like I mentioned before, Coupang's biggest investor is SoftBank, and they initially put in $3 billion, which is now turned to $17 billion. Had they IPO'd in Korea, the kind of paper profit they have right now, it wouldn't have been possible. And fun fact, the entire South Korean stock market is worth $2.3 trillion, which is slightly more than Apple's market cap of $2 trillion. And speaking of valuation, Coupang is trading crazy rich right now. Back in their 2018 pre-IPO, Coupang was valued at $9 billion. And even CNBC's Andrew Sorkin, who talked so much hype about Coupang, he had to laugh about all of this.
The $60 billion valuation, literally just weeks ago, people thought it would be a $50 billion valuation. And a year or two ago, it was half that. So, well, maybe welcome to 2021.
And it's really not hard to see that overall the current stock market is very greedy, with lots of people piling, thinking the stock market only goes up. I mean, there's even a FOMO ETF coming out soon, for crying out loud. And you can clearly see the disconnect surrounding Coupang's high valuation by listening to what South Koreans had to say about it. And you wouldn't have to take my word for it since this video is in Korean, but Korean analysts were capping Coupang's valuation at $30 billion, since it hasn't been profitable since 2014. And at its current valuation, Coupang is more valuable than Naver and Hyundai. Naver is worth $54 billion and is basically the Google of South Korea that handles 75% of all web searches. Hyundai, of course, is a car manufacturer we all know, and it's only worth $43 billion. And even worse, Coupang's competitor Emart is only worth $4 billion, and another company, Shinsegae, is worth less than $3 billion. And sure, Coupang has its own growth story going on, but trading almost 20 times higher than its closest rivals is just silly. Because remember, unlike Amazon, who has AWS, Coupang's main bread and butter is still e-commerce. And sure, Coupang has other ventures like meal delivery, online grocery fulfillment, payment processing, and digital advertising, but they all account for less than 10% of 2020 revenue. And this is what Lydia Jett had to say about all of this.
I know that you and I have talked about comparing Coupang to, the quote-unquote Amazon of Korea is too simplistic. It's really grown into more than that. But one thing that it doesn't have that Amazon does, and I think this is key, is a cloud business. Amazon's cloud business is really the profit engine and helps Amazon pay for more ambitious projects, makes it cash flow positive. Coupang, on the other hand, still depends on external money and capital markets. So will there be sort of this high margin profit engine for Coupang that will keep it growing, especially at a time when competition is increasing from some of the big Korean conglomerates?
I love the fact that you pointed out how different the U.S. is from Korea. So, I think to understand Korea and the retail landscape, you need to understand that the retail consumer in Korea doesn't have big box retail. It doesn't have Walmart, doesn't have Target, Home Depot, PetSmart. The U.S. consumer has 11 times more retail landscape and therefore has much more from an assortment perspective, much more advantage from a pricing perspective. And so Coupang sees that need and is stepping into this hole. I think when we talk about Coupang, what it is Amazon, but it is Amazon with a UPS attached to it, with DoorDash, with Instacart, with a little dash of Netflix. And that is all integrated on this technology platform with an extreme degree of customer centricity, these concentric circles of customer value. And the customers really see and feel that. You can see that in the numbers of this company. And so that experience, as Bom described on your show earlier today, is being able to place an order at midnight, waking up at 6 a.m., having that order outside your door, having it arrive unpackaged without a box that you have to dispose of, being able to set returns outside your door and have them picked up and immediately credited back to your form of payment. This is extreme from a customer centricity standpoint. And I think this market is evolving very differently from the US. And I think we can expect that in the long term, the margin profiles might look different as well.
I mean, she sure talks a lot, but basically letting us know that creating a cash flow machine like AWS currently isn't a priority for Coupang. And maybe they'll do a surprise announcement, but I think that if they were, then they will be telling us right now, since they're trying to sell Coupang as a massive growth story. As a result, without having a profitable cash flow machine like AWS, Coupang, they're going to have to issue more shares, further diluting current shareholders in order to fund future growth. And sure, they might have 25% of the current e-commerce market in Korea, but Coupang's rivals are teaming up to steal market share. Last November, Amazon, they bought 30% stake in 11th Street, another e-commerce operator that is owned by SK Telecom. And Coupang, they might have more market share than 11th Street right now, but they now have to deal with Amazon's deep, deep pocket. I mean, Coupang might as well just change this wording in the SEC filing and just come out and say that Amazon has competitive advantages such as longer operating histories, more experience in implementing their business plan and strategy, better brand recognition, popular offline location, greater negotiating leverage, established supply relationships, significantly greater financial, marketing, and other resources. In addition, Coupang also had to deal with SK Telecom, which is once again the parent company of 11th Street. Earlier this year, eBay Korea, they announced that they were looking for buyers. And on March 16, 2021, bidding officially started and huge companies like Lotte and Shinsegae, they became involved. And who else do we have here? Yep. That's SK Telecom. For context, eBay Korea is the number 3 player in the South Korean e-commerce space, and they operate Gmarket, Auction, and G9. And going back to this graph, SK Telecom, they currently own 11th Street, and if they are able to acquire eBay Korea, they're going to be able to control these platforms with the financial backing of Amazon. And another thing, this graph shows market share in terms of users. For example, Naver might only have 8% of the Korean population, but they currently lead in terms of transaction volume. Coupang is second place right now, but once again, if SK Telecom is able to buy eBay Korea, they're going to be able to push Coupang to third place. So don't look at this graph and be fooled by Coupang's 25% market dominance because public preference can change in an instant. Coupang gets the most attention right now because they have been marketing themselves like crazy. But just like this Coupang shopper says, there are so many other options available and some can be as fast and cheaper than Coupang. And in addition, if you needed another reason why Amazon is such a big threat, read this section of Coupang's SEC filing. Our apps and websites use AWS. Our operations depend on AWS. We have no physical access or control over AWS and cannot quickly or easily switch to another platform. If AWS is disrupted for any reason, it will damage our reputation with customers, expose us to liability, cause us to lose customers, and harm our business. AWS may terminate the agreement for any reason with a 2-year notice. And lastly, AWS, they may also terminate the agreement for cause with just a 30 days notice. So do you still want to invest in Coupang? It's okay if you do. All companies, they deal with external risk factors. But with that out the way, let's get into something darker and talk about all the ways Coupang is hurting themselves internally and also being a danger to society. Now, throughout the pandemic, South Korea has been seen as a role model for the way it curbed the spread without a nationwide lockdown. But even in this corona-controlled paradise, we had a few offenders, and surprise, surprise, or maybe not, one of them was Coupang. On May 24, 2020, authorities, they notified Coupang that a positive COVID case was traced back to its Bucheon warehouse, and work was suspended for a few hours to get things disinfected. But by the same afternoon, the managers, they told workers to, just get back to work, despite the workers' oppositions. And shockingly, the virus, they ended up spreading over the next few days, which resulted in a total of 152 cases traced back to the Coupang warehouse. And this instance is just one of many accounts of Coupang violating workers' rights, well-being, and also their livelihood. Many employees, they reveal having to work in windowless fulfillment centers without proper heating during the winter and no AC during the summer, and permission is also required if you want to go to the bathroom, and their hourly workload is calculated in real time. And I'm getting serious Amazon deja vu with all of this. A typical Korean delivery worker, they might average around 71 hours of work, which is going to lead to fatigue and loss of needless accidents. According to Representative Lim, the number of industrial accidents at Coupang facilities have increased more than 400%, from 48 cases in 2017 to 224 cases in 2020. But more shockingly, Coupang has seen a lot of employee deaths. On March 8, NBC News, they ran the story of a dawn delivery worker who died from stroke caused by kwarosa, which translates to death by overworking. He worked the overnight shift at Coupang, working 9 p.m. to 7 a.m. for an entire year. And the sad part was he ended up canceling a family vacation because he was too tired and just wanted to rest. The news reported that after he passed away, Coupang they released a statement that included only 2 sentences offering condolences, while the rest just argued that he wasn't overworked. But wait, there's more. Last March, another Coupang delivery man was found dead while delivering packages, and in May, a warehouse worker died after collapsing, and in October, a 28-year-old employee, he died of a heart attack after working an average of 58 hours a week. While these terrible tragedies are being reported in South Korea, this is how they address the situation on CNBC.
All right, and I think just like Amazon in the United States, Coupang certainly has this, or a lot of South Koreans, I should say, have this love-hate relationship with Coupang as well. They love the service, and they live with it, they depend on it. However, a lot of negative headlines, and especially when it comes to a lot of technology companies in South Korea, that has been really the case, and that's why they got a lot of regulatory spotlight and perhaps negative in terms of the public opinion. Would you flag these factors to potential investors of Coupang shares?
Well, I think the most important factor is that whether or not this company will turn into positive profits in the future. Obviously, those negative sentiment is the reason why the Korean companies tends to be trading at much deeper discount. But if you look at the overall profit numbers, even though this company has market share of almost 25%, it is showing, and also it has grown about 90% in sales number. It is showing a operating losses of about $474.6 million US dollars. So clearly it is still making losses. And I think that's because of these regulatory impact or some of the concern that you are seeing here. The question mark is that whether or not they continue to achieve this economy of scales and also be able to increase its overall sales number, not just in Korea, but I guess on a global scale, and eventually turn into a very profitable business.
So nope, negative public image be damned. We're focusing on future profits. And if there's nothing else you remember from this entire video, I hope you remember this interview before you invest in Coupang. In addition, Coupang also faces unfavorable Korean laws to its businesses. There's a Serious Action Act where criminal and civil liabilities can be imposed on Coupang and its management team. In addition, executive officers, they may be investigated or held criminally liable for actions of the company and its employees. And over the years, Coupang's executives have been previously named in criminal investigations, and even though this is a common occurrence in South Korea, foreign investors, they might get spooked, which might negatively affect the stock price. And here's more bad news. Coupang's non-executive employees are now able to sell almost 5% of Coupang's total shares, around 34 million shares worth around $1.7 billion, thanks to an exemption clause. And since many of these employees are able to buy the stock below $2 a share, expect some heavy selling pressure as Coupang shares get flooded into the market. And I promise I'm almost done bashing Coupang. There's only 2 more points left to make, and I can finally go to bed. The next point of concern is Coupang, they created 2 classes of share, Class A and Class B, which isn't abnormal. They are identical, but with the exception of voting power. Class A shares, they get 1 vote per share. Class B, they get 29 votes per share. And guess who the majority shareholder of Class B shares is going to be? Why, it's going to be Coupang's CEO, of course. Now, this unequal balance is going to give Mr. Kim 76.7% voting power, so you better pray he continues to do what is best for Coupang. But of course, he's entitled to vote however he wants in ways that might not, be beneficial to shareholders. And to finally wrap it all up, we turn to page 53 of Coupang's SEC filing, and you're reminded that a big downside to investing in South Korea is its northern sibling with a big red nuclear button. Here's a visual reminder. Coupang is located right here in Seoul, and here is North Korea, just 50 kilometers or 31 miles away. It makes you understand why Coupang didn't go public when Trump was president. But let's say in North Korea it does start some trouble, and let's say hypothetically Coupang is still operating as usual. They better start hiring more female workers, because if another Korean war breaks out, all able-bodied men are going to get drafted. So good luck trying to replace all those Coupang delivery men right now. And personally, I already gave my 2 years to the Korean military, so I really hope that I don't get drafted. And if you're going to be a Coupang shareholder, I hope you're okay with the possibility of an armed conflict. So yeah, I think this is going to be a pretty long video, but that's pretty much all the reason why you should avoid investing in Coupang. But as always, you can do whatever you want with your money. And if you disagree with any of the points or why you think Coupang is a great investment, make sure to leave your arguments below. As always, don't forget to like and subscribe if you made it to the end. And since it's already 3 a.m. here, I'm going to go off to bed. Thank you so much for stopping by. Happy investing. Stay safe out there. And I'll catch y'all next time with more financial shenanigans.